So what is Blueprints to Building Wealth? This is a real estate podcast where we discuss what it takes to improve property into its highest and best use, with a heavy focus on zoning, the design and permit process, financing, as well as an efficient construction process. We cover the resources that are out there so that you can take the next steps in your own backyard. If you're thinking about getting into fix and flips but want to jump to the next level, then this podcast is for you. So crank it up to 1.5 speed, follow me and subscribe if you want to see what hidden density is in your property.
All right, guys, this is the Blueprints to Building Wealth podcast, where us engineering types use what we do in our day job and take those blueprints back home and use it to build wealth in our personal portfolios. This is where our listeners learn different design strategy, construction strategies, and other tricks of the trade to increase the valuations and appreciations. Every week, we bring on a different guest who explains how they've used blueprints to building wealth in their own journey in order to educate our listeners on the different resources that are out there so they can accelerate their road to financial freedom. And without further ado, today we have Eddie Austin. Eddie is a serial entrepreneur, owns a portfolio of companies. He's a business and real estate professional. His passion is tied to commercial real estate, creating opportunities through real estate investment funds. His driven purpose is to help others create indestructible wealth through education around leveraging real estate. Eddie's been in real estate since 2004, starting at single family homes and progressing into the development. He's overseen general contractors on large scale projects such as solar, such as industrial and ground up commercial developments, as well as apartment redevelopment and other value add initiatives. So today we're going to focus on Eddie's blueprints to building wealth journey so far. Eddie, how are you doing today?
And I'm doing great, Ross. Thank you so much for having this platform for us to come in here and just jam out on real estate. And so thank you first and foremost. And I'm going to try and live up to my bio here.
Okay. Yeah, that's a very, very robust bio. So I like that you've done the single family home because you'll resonate with a lot of the listeners. And then you've accelerated and really gotten down the path in development, specifically some bigger development stuff. So kind of the first thing I do with all my guests is, if you can, just spend maybe 60, 70 seconds giving us a quick introduction about yourself, and then kind of explain how you've been able to implement blueprints to building wealth in your personal journey.
Yeah, absolutely, man. So, I do a lot of things, very dynamic, as stated, serial entrepreneur. So my path was a little bit different. I came from corporate America. I was a master electrician. I was fortunate enough to work my way up to top management in a very large manufacturing plant. So, there was a lot of blueprints when we wired out, these big buildings and we built these big projects. There was always a blueprint. So it always seems like that's pretty easy to follow. But however, when you start to build your own blueprint, I call it manifesting, towards building what you really want in life, that's sometimes harder to obtain because you have to draw your own blueprint. So as you've seen there, I started out in single family. Like that was a blueprint that at the time my dad was, building spec homes or doing flip homes. So the blueprint was kind of able to be told to me. And then once I accomplished that, I'm like, I'm still broke. The dream was to become financially, independent, to create that indestructible wealth to where, no matter what I did, I could always afford, no matter what the cost is. Whatever the bill came in the mail, no matter how many people I want to help, I could always afford that. And single family homes didn't provide it. And then got into development. And as any developer knows, it takes a tremendous amount of your own money that you put up front to start to build, the blueprints of what you're building. You have to do the civil drawings, and you're paying people a lot of money to build all this stuff out just so you can deliver that to an investor and hope they'll invest with you. But at that time, you're using all of your own money. Unless you've got a fund or something like that, you've got a resource of a a large resource of capital that you can deploy into that. But when we first start, or at least for me, I had to use a lot of my own money. So again, when I'd find this piece of land or find this project and we would start to do it, I was paying for all the blueprints, I was paying for the civil drawings, engineers, just to build the model, the vision, so I could sell it to someone else, and then we could get started. So at that point, I started general contracting because I had the skill set, but I needed to make money. So I started doing general contracting and doing other pet projects for other people. And then I found that, man, I was out of time, completely out of time. And I was like, all right, I'm going to build my own business from here. And that's when I realized that I got into serial entrepreneurship. And from there, I started to really learn business as a whole. And then when I applied business to what I do now, that's when things started to work.
Awesome. No, that's quite the path, quite the journey. So, on your well, and just for our listeners out there, I know we just spoke a little bit. Where's your market, or where are you typically focusing here in the States?
Yeah. So, I really like Texas, predominantly Dallas and Houston, North Carolina, South Carolina, Florida. Haven't done anything in Georgia yet. I've definitely done some business in Kentucky, done some business in Indiana, but I usually don't choose to hold any of those opportunities very long. So normally if I'm going to buy and hold something or do a value add, it's normally in the Texas market, North Carolina, South Carolina, always looking in Florida.
Okay. So yeah, so you're kind of southeast, and then south, I would say. So definitely some strong markets down there. And then maybe let's unpack kind of. I mean, you said a couple things. You said manifesting. You said you kind of. Well, you said you worked with your father early on in your career, so you were able to really, I think, leverage those things, but maybe unpack that a little bit on how you got into single family. So I'm not sure if your father was a mentor to you, or maybe
Absolutely.
along the way maybe along the way you found some other mentors, but maybe unpack that a little bit for us.
Yeah. So, my dad worked for Rody Chris Craft at Chris Craft Boats. He was a ship carpenter captain. So he did all the carpentry work, built boats. So he's very good with his hands. Definitely a carpenter of any magnitude. He could build it. If you could think it up or draw it out, he could build it. And Dad loved building with his hands, so he's still around and still, plants things, builds things. He's always into something. But he always, if he couldn't afford, to buy that house, he'd build that house. He'd find a piece of land and he'd build that house. And a lot of the times, Dad would find something else that he already wanted. So Dad would end up building that house to sell it. That's not how he started out. And then when he realized, hey, I can build this thing for $85 a square foot and sell it for 150, 130, he started to think, hey, well, why don't I just do this full time? And then Dad also would see a certain project. We would buy a home and then we would renovate that home. My dad was always a visionary, and I had that vision as well. So, we're driving down the road, we see a home, we're like, hey, that thing would be gorgeous to be, revitalized. So we would buy it and put money into it, revitalize it, turn around and sell it. But, it's a transactional business model. Me and my dad both, we're relationship people. And it didn't seem like there was much relationships in that business. Yes, we had our buyers, we had our sellers, stuff like that, but we were always just collecting money. We were never building continuity. We were just, doing that. And then we were just following the blueprint, but the blueprint was always a moving target. So when I started to really learn manifesting and really started to putting together blueprints and engineering skills and really thinking about that, I'm like, what if I built a blueprint for my life, but I focused on the end goal? Like, what is the goal? And then I thought about, how long do I want to take to build this project, my life? And from there, I'm like, okay, if I want to make $100 million in the next 10 years, let's reverse engineer that. You know, okay, we can quickly rule out single family fix and flips is going to be a lot of work, to make $100 million in 10 years. Achievable, probably. And then we think about general contracting. We think about the headache of that. It can be done, yes, but how much of me is left over? And what's the path of destruction behind me from that? And then from there, I'm like, okay, well, this needs to become large commercial real estate. And I need to own, flip, I need to do this at a very large scale to get to this $100 million. And is this $100 million net worth or is it liquidity? So those are questions I had to put down. So those were the model. As us developers, we see that model. I had to see what this skyscraper looked like. And then how long do we going to have, how long does we have to build this project? And, as any developer knows, it's a year of planning underground and then a year to get it out of the ground. And then we start building. So, there's a planning phase, but I basically reverse engineered where I really wanted to go in life. And that changed a few times. The target changed.
Yeah. I listened to a very good colleague of mine. He was explaining how, similar to what you're saying, but he explained, hey, look in the future and see yourself after you've passed away. Now that's a dark story, but what are they saying? What is everybody that's coming back to see the burial? What are they saying? And what are they saying you did and what you achieved? And then from there, whatever you want them to say and about you, reverse engineer that. So, that's something he said like last week, and now I'm connected with you, and you're basically saying something similar. Look at where you want to be and just do something simple. It's what us engineer types do. Is you just you figure out a better way to build the mousetrap. So that's really cool. Okay, I like that.
I want to continue to build on that for just a second. I feel like I had a very good conversation with a traveling nurse coming back on the plane from Dallas one time. And, we were definitely meant to be sitting beside each other. And she was, thinking about her next 5 years on leading into retirement. And she kind of felt lost. And I really took her through, I guess you'd say, a coaching program on manifesting. And I said, I truly believe that we should always be manifesting. We should always be very cognizant of where we are in our current life and what we're doing every day to get where we truly want to go. All of us, I think, are born and go to school and understand that we want to retire by 62. But what does that truly look like to get there? You kind of have to build that blueprint. And then you have to build the blueprint also that you have certain things put in place or enough time that you can deal with the unexpecteds, the things that come up that cost more money, losing your 401k. You've got to think about that.
Yeah. No,
but I
sure.
think definitely you always have to be manifesting. You always have to be maintaining your path. We just can't just fly through the air, just fat, dumb, and happy, and expect to end up at a destination. Like, you have to actively evaluate and maintain on track. I'm a pilot as well. And, piloting a plane, you just can't get up here and just, willy-nilly just fly around. You've got a destination. And that destination you're going to land at is a point of destination. And I feel like, to go along with what your buddy said, that death is the point of destination. And what does it look like to get there? Like, you should know that, and you should know what kind of legacy you want to have when you do pass.
Right. So yeah, I wasn't totally expecting to talk on the manifest, but I really like that. I really love it. What are some, I don't know if it's a routine or maybe some resources for me and the listeners Yeah, what recommendations or what's kind of
Well,
like your routine?
I'm going to tell you how I started, and it was right
Okay.
here, and it was a
Yep.
legal pad. And so I got into the business because I was broke. So when I started welding at 12 years old. I was homeschooled, graduated early. I was working every day, 40 hours a week at 12 welding. And, I wanted to gain a trade that allowed me to make six figures a year, because when I evaluated people that made six figures a year, it seemed like the lifestyle that I wanted to live. Now, I will warn you, I do not chase money. Money is not the goal at all. I found that to be a very painful process of I'll be happy when I have the Gulfstream 650. I'll be happy when I have that $30 million mansion. I abandoned that ship. But what I did is I took that legal pad and I wrote down $100,000. And then I took taxes out, and that's $64,000 to $74,000 or 68,000, depending on where you live. And from there, I know what I had left. And then I had my house payment, I had my car payment, I had insurance, health insurance, all these things that were my direct expenses. And then I had my indirect expenses, like, cost of living, like out to eat, gas, groceries, all these things. And what I figured out is by the end of my legal pad, when I wrote down fund money or I wrote down my savings, I had very little left. And I've always liked numbers. I've always been a numbers driven person. And on my calculator from that point, I was like, okay, I want to retire by age 40. Like, I've always had the dream to retire by 40. So I'm like, if this is it, I'm not going to calculate my raises. I'm just going to calculate making six figures a year. And this is my taxes. And then I'm just going to take this number. Maybe I can pay off my house. Maybe I can pay off my car. There's a lot of different things. But I took that bottom number and I just hit times 10. So that represented 10 years of work. And I'm like, oh, well, then I evaluated the stock market and these other avenues that we use to multiply our money while we sleep. And I'm like, that's not going to be enough either. And then times 20, times 30. And I'm like, man, there's a lot of risk. Like, what if there's an economy crash? What if I lose all my 401k? Like, at that point, I wasn't willing to go down that road. So then I'm like, okay, well, my first thought was, you know what? If everybody gets to retire at 62 from working 40 hours a week, I'll work 80. That way I can retire at 40. Well, then your taxes go up. You may make more money, but your
Right.
taxes go up. And then when you make more, you
Right.
spend more. So from that point, I'm like, okay, what are we going to do different? And that's when I started studying the wealthy. I started realizing success leaves clues. And then I started building the blueprint of, the ending destination. I want to retire at 40. I want this financial statement. This is what I want to look like. My schedule of real estate, my net worth liquidity. These are the things that I wanted. And then I started building that path and getting into that. And I'm like, okay, so it's going to take getting some hands dirty. I realized then, but I was so happy to do that because then it started to make sense. Like, I knew what it took to get there. And then I started taking the next page. I flipped to my next page of my legal pad and I started making goals, like wayfinding points. Like, when I get to here, I'm halfway. When I get to here, I'm three quarters of the way. And I realized I broke those down to what it would take. How many businesses do I need to own? How many cash flowing properties do I need to own? I could start to I could actually start to see what was really going to happen. And then I could see off my balance sheet how far off I was.
No, that's really cool. So you've kind of gone into another example of reverse engineering.
Yeah.
So you took the numbers, throw it on the legal pad, and put the actual math to the pen to paper and do the math, and then you're able to reverse engineer what paths will get you there. And you quickly realized, hey, if I work twice as hard or twice as many hours, I'm going to pay more taxes, and it doesn't make sense. So then you quickly pivot and navigate to the next, which is studying the wealthy and seeing seeing what they do and how they do it. Yeah, in a lot of cases, there's no reason to reinvent the wheel to get
No.
to the end goal. And I like that how you chunked it down, and just, yeah, major goals, put it out there. And then I think the one thing is, by doing that process, you really develop clarity. You really develop clarity in your mind, and then you've got clear goals. Um, yeah, you've got clear goals that give you that path to the next step. So I really like that. Yeah, uh, I do something a little similar. I mean, I use my notebook, but every morning I do write out, what I want to be, where I want to be, and how I want to be, obviously in the future, present tense. So that's my habit.
Hmm.
And then I just kind of sit there and focus. And when I'm writing that out, putting pen to paper, it kind of melds with me, in my mind. So no, I like that. I think we got a lot of stuff, and yeah, a lot of similarities. That's pretty cool.
I know,
Um,
one thing that it seems like off human nature, we all quit on something because we don't know how long the pain's going to last, or we don't know how long something's going to take. So that unexpected is something we just can't handle for a lot of people. So having it wrote down, you understand that, okay, well, you are off track on your 5 year mark, and you're going to have to do these certain things to get back on track, and then starting to break that down. One thing I'll definitely say is, you know, one thing the wealthy don't do is they do not trade hours for dollars. And that was the biggest delineator was, okay, well, I can't trade hours for dollars because time is my greatest adversary. And there's only so much time in a day. So I can only increase my hourly wage. Well, even then, there's a scalable point. There's only so much of you. And when there's only so much of you, you got to figure out how to do it differently. And, that's why everybody says passive income, residual income, make money while you sleep. If a rich man wants a Corvette, he's not just going to go swipe the credit card and buy it. He's probably going to, go buy a piece of property that pays him enough, and he's going to go lease or buy the Corvette, and someone else pays the payment. That's the difference, because he's not increasing his expense. If he increased his expenses, he increased his top line as well. So he's making more income to pay for that toy if that's what he truly wants, or he's making so much money he wants a tax write-off.
right.
But
No,
that
definitely good stuff.
the lady I sat
Yeah.
beside, she started to get emotional at one point because she says, I've got about 5 more years. I went to college. I did all these things. I got to where I am, and I'm not happy where I'm at now. And I feel like I'm too old to do something else. And she goes, you seem like a very intelligent person. Would you have any ideas for me? And I laid out a path for her. I said, hey, grab a piece of paper. I said, now this is just my opinion. You got to do what you're passionate about. But here's what I would do. I said, have you made a lot of mistakes through your years? Could you teach someone else to do something? Like if you went back and redone your journey, was there certain things that would have saved you time? She goes, oh my God, yes. I would have done so many things different. I said, well, why don't you write a book on how to be a traveling nurse? And then that's your retirement. Like over the next 5 years, write this book, sell this book, do the marketing, and then, you're just going to travel around and talk about your book that you wrote and how you helped other people get there faster. And she goes, oh my God, the emotion hit her because of why? She did not know the outcome currently, but when she could see the outcome and what was possible in the next 5 years, she got very excited. And those tears were of emotion, of excitement that she found the answer. Like she was afraid of the unknown.
Yeah. Okay. So maybe let's kind of segue into, I guess, I'm just curious to give the listeners and myself a little bit inside, of what your normal week looks like. But yeah, what did your normal week look like last week, or maybe the week before here in February?
So it's going to go back to almost the same thing. Show me your calendar. I can show you your outcome. So my calendar, first and foremost, starts out as what is the one thing that will change everything? And that is the very first thing on my calendar. So what's the one thing that I can do that gets me to where I want to go in my time period? So my calendar starts with what is most important that can get me where I want to go. And then next is my operational stuff, checking emails, responding to emails, attending meetings for my properties, working with my team, traveling to create new relationships. So in my calendar, it kind of starts out. Number one, what is the most important? Whatever that is, that's on my calendar first. And I will be honest, a lot of the time it's my health. Going to the gym, a healthy breakfast, maybe that's some meditation, getting myself right. You can't pour from an empty cup. So, if you don't fill your cup up first, you can't pour into someone else. So the first thing I do is fill my cup. I 30 minutes of education on a podcast, I'll go back and listen to this podcast as well. And, then for the gym, any meditation practices I have, praying, anything like that, I fill myself up. Then the most important thing, and then, anything that needs my direct attention. So evaluating the income and evaluating the expenses of everything we're doing. And then from there, maybe that warrants firing off some emails. Hey, we're over budget here. What are we doing? We're down on income here. What are we doing? And then there might be a response period, but I don't stay in the email thread because I burned down an entire day just emailing back and forth. And somebody stole my day from me. And at the end of the day, I was very upset by that because I missed all these meetings that was important. They were important because I built my calendar to where I wanted to go, in the next 5 years or tomorrow or the end of this week. Like my calendar was a direct representation of my education and where I wanted to go by the end of the week. And when I spent the whole day missing meetings by firing back emails back and forth, I'm off target. Gotcha. So yeah, that's what my calendar looks like. Very busy.
Hey guys, walking one of my ground up projects here, and there's all kinds of opportunity that we're forcing appreciation through this design and construction process. This is what we cover on Blueprints to Building Wealth. Is everybody knows that real estate will pay you cash flow, tax benefits, appreciation, fourthly, the mortgage pay down, but nobody talks about forcing the appreciation through the design and the construction process. And that's exactly what we cover. That's what I've been doing for over 5 years in the Los Angeles market, where we're able to build for, $200 a square foot, sometimes a little bit better than that. And, market listings, they're going to go for, $500-600 a square foot. In some markets, you're gonna see them go for $800 to $900 a square foot here in Los Angeles, which is crazy. Not more people are doing this. So if you're interested, follow along. And if you want to invest alongside me, go ahead and hit the link below. I'd love to chat and let's talk.
I work on average, usually 12 to 16 hours a day is usually my normal work day. Usually 5-6 days a week. I'd usually try to leave time with family, and I try to give my family the best of my time. So when I have it, so I usually try not to arrive at home, completely burned down and then try to spend time with the family. I usually do try to allocate time in the middle of the day or the morning to spend time with them when they have the best of me, not the reacted point of me beat down through the fight, been shot at all day,
Right. No, I think that's really important. I like how you phrased it. You have to fill yourself up first.
Yeah.
You've got to get that mindset. You got to get your mindset correctly for the day to take on the rest of the day. You've got to go keep your body in shape, in really good health. I like that. I'm gonna use that again. But yeah, you got to fill yourself up first.
It's so true. You just can't give. Some people desperately need what you have. And when you have nothing to give, you're both screwed, in my opinion. You've got to fill up your cup. And one more thing I wanted to add before we move from the subject
Sure.
was when certain days do get disruptive, so a meeting goes long because it has to, and it becomes a very heated, very action-taking meeting, and I leave that meeting with just a horrible mindset or just in a bad place, I am guilty of completely leaving my office and going for a walk and completely restarting my day because I know that the rest of my meetings are not going to go well because I'm in this piss poor mindset and I'm not going to give the right answers to my team because I'm in this state and it's not their fault. They're going to say, Eddie, we've got problems. Why do we have problems? It's because it's not their fault. It's because I am not centered. I am not where I should be. So I'll leave the office. I'll say, hey, I'm sorry, I can't make this next meeting. I got personal things to do or something, and I'll make that excuse and I will walk out of the office and I'll go take care of me.
So smart. So smart. Yeah. One thing I frequently do with my wife is just if I've had a tough day or, I'll walk, especially there's one development property that's here locally. I'll walk and, a lot of times I come back and I'm frustrated and I just say to my wife, I'm like, hey, after dinner, I want to go for a walk. And she goes with me, but man, I'm telling you, just getting fresh air, getting outside, getting in a different environment. And, it could be a 10, 20-minute walk. It doesn't take much, but I come back, I feel better. I've got a new lens on, a bit more clarity. And yeah, I would definitely echo that's a very healthy habit to have, very wise habit. If you're not ready for the next meeting, then just hit time out. Say, hey, I'm gonna have to pass, but you know what? I'll be back in an hour, so that you're not impacting the folks. You're not impacting the other folks in a negative mannerism. So I like that too.
Something else.
Well,
sorry, I didn't mean to interrupt, but something
no,
else also is I've also realized that when we've allotted ourselves an hour to complete a task. And you go take that 15-minute walk and just find your clarity and recenter yourself. You can come back to that exact allotment of time to what the task you laid out was an hour. And Ross, I've sat down after coming back from that walk and I ripped through every task that I was supposed to get done in that allotted time in 15 minutes. And I had another, 30 minutes at the back of that because I did one thing. I just said, you know what? Time out, game plan change, go outside. I'm going to listen to the birds. I'm going to take a walk. I'm going to sit down for a minute, take in nature, whatever. I'm going to recenter myself. And I didn't need that full hour. I knew that an hour is the longest it took me to complete this certain task. But when I got myself right and I come in, man, I ripped through the emails. I ripped through the questions. I fired it off and it was done. And it was done in record time. But it was only because I recentered myself. I gave myself time to refill my cup and come center again.
No, that's cool. That's very cool. Maybe can we talk a little bit about some of the deals you're doing? I know just before we jumped on here and started recording, you said you typically do deals. They're about 12 hours away, 10, 12 hours away. But maybe just for the listeners and myself, what's an example of, pick one or two deals you're involved in, kind of walk us through the structure, from raising the money up until implementing and ultimately stabilization if it's that far along. But yeah, what's a one or two example deals that you see or you're doing?
So the biggest things I'm involved in right now is multifamily. Multifamily value add. So these are Class C deals. Yes, we had to raise capital to buy them. Raising capital, it seems like I've always been really, I guess, naturally skill set on raising money, but I've always been a good promoter and I've always been selling. So, and I'm truthful. I'm a storyteller. So, people relate with me. So I'm always on Facebook, Instagram. I brand myself well so people know what we do. I'm always educating others so people know what kind of opportunities we have. But yes, you've got to get good at raising capital. Everything you want in life lies in someone else, whether that's education, money, um, a building that you're going to buy or someone you're going to sell it to. It's always in someone else. You got to look outside your network. So I'm always expanding the network. And then, we buy these things and we do a takeover phase. So we hire a property management company. We don't normally buy anything that is, less than 200 doors. We found that, it's
Wow.
best to have bigger properties and you can make sense of property management. And then I asset manage those assets. So I stay close to the cuff and we evaluate expenses. We evaluate income. We evaluate leads to the property. How many customers? I had somebody ask me, they say, well, how much real world experience did you have before you bought your first multifamily deal? And I said, well, I had a single family rental, a duplex, and then we went and bought a 48 unit apartment building. Holy cow. What did you feel like qualified you to do that? And I said, well, again, first thing I did was I walked in the bank and I said, I got this legal pad here. What does it take to qualify for a $4 million loan? And I started writing it down. And then I had my check boxes and I started checking it off. And then from there, I was able to either find a partner that had net worth and liquidity. I was able to find someone that had operational experience. So we checked the boxes. We bought the deal, decided we didn't want that deal. So we wholesaled the deal, got rid of it, went and found something else. And it was just a learning experience. But to answer the question, when somebody said, what qualified you for that? Well, I knew I was good at business. My businesses were profitable. I understood profit and loss statements. So, when somebody says you own 400 units in another state, 12 hours away, no, I own a $60 million business and I own that with partners. I'm just a partner. I'm just an asset manager over these deals. All I'm doing is managing the asset. But that's the way I look at it. I take away emotional attachment and I just manage the business. It seems like when we put in place emotional attachment, we bought this thing because we just love it. That's the wrong way to look at it. You got to fall in love with the numbers and then maintain the numbers so you can get to the outcome of where you really want to go in the next 5 years when you sell this thing. So, in implementing your business plan, you build a business plan. Again, you started out with a legal pad or an Excel document, and you manifested what this thing was going to do over, renovations. And then from renovations to renting those renovated units out, and then rent bumps over time. So you understood your yield on cost and you understand what you believe the appreciational value is based off income and expenses, what the NOI of the property is, and what Dallas might, sell something for this size from your sales comps. There you go. You can tell your investors what your anticipated returns are. So
That's
all
awesome.
I do.
I'd like to,
Yeah.
well, sorry, just to jump in. I just want to echo what you just said. You have to fall in love with the numbers. You want to do a thorough analysis. You want to do a thorough underwrite it. You want to have your partner, other people in the deal that are very well rounded, looking at this, double checking it, scrubbing the analysis for any errors out there, and then don't fall in love with the asset, because I think that's one thing people get emotionally. They see a deal, they get emotionally attached to whatever its location, the way it looks, the modern style, or maybe it's more of a classic style. People get emotionally attached real quick, and then they fall in love rather than falling in love with the numbers, which is, it's really going to make or break the deal. So yeah, I just wanted to take a second and kind of echo what you said on. Yeah.
I'm glad you did. Now, I'm going to share one mind-blowing thing that I've actually got a broker to go, what in the world? So I fell in love with the numbers. I liked the way it looked on the internet and everything else. And I went and looked at the property and I walked the property, and I'm a true visionary. I'm a true feeling person. And so fly down, walk the deal. And, this is an amazing deal. And off market, everything's right. Everything is telling me I should buy this deal. And got a relationship with a broker. If I want financing to be lined up, investors lined, every box is checked. I flew down, I walked on the property and said, this ain't it. And we turned around and walked out. And he's like, whoa, 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 wait. What in the world, man? The numbers are good. Like the price, the NOI, the locate, like everything's good. And I know you can afford it. Like, what's the deal? I don't feel it. I don't feel good about this one. I said, I just don't feel like this is my property. This is not one that I'd put on my website. This doesn't have my feeling. And he's like, I don't understand. Like, you get a feeling when you're on a property, like what kind of crap is that? And I was like, no, I do. I when I visit that property, and there's certain ones where I've dug deep to make the numbers work, because I'm like, this is the ugliest property in the best neighborhood and the numbers aren't right, but I see something that we could build into a business plan that would make this thing phenomenal. And I know that right over there, a baseball throw away, there's brand new development. In the next 5 years, this thing's going to blow up. And that wasn't necessarily on paper, but it was just my intellect of everything. And I'm like, we're going to buy this property. Are you sure, man? This is not near as good as the one you just walked off of. No, but I got the feeling on this one. This one's it. Sometimes I'm wrong.
Sure. Well, yeah, and looking for kind of what you're explaining, this place is going to blow up in 5 years. You gotta know the city. You gotta know where the path of progress is going. I mean, there's some in some of the bigger cities, you can go to the metro, the local, whether it's Dallas or Houston, you can go to the metro's website and kind of see what projects they're putting out there to bid, and immediately there'll be some map attached. You can see, where that path of progress is going and where the city is pouring money into to improve their city and the infrastructure around it. So that's kind of one trick I've learned over the years, being in the construction management field. If you want to quickly see where the path of progress is locally, there's simple resources kind of to say it like, if you're looking for stuff like you're saying, like this place is going to blow up in 5 years, you can get a quick double check by going to typically the metro's website or something like that, online. So that's cool. Very cool.
Yeah, I call it green space. So if you looked at certain city maps and you go in, there's probably this light green array that's forecasted out, and then there's red space. The red space is probably that. Now every city is different, but the red space usually means that that's going to be revitalized in the next 20 to 30 years. So everything's moving from that side of town, and it works as a circle. So usually you've got the hub, the middle of Dallas. So if you think about Dallas before DFW, so you had Dallas, Texas. Well, then what happened is there was a point of destination where they went out, and that was green space. There was this light green array, and that got built out. And then what happens is it starts coming around. They know they're not going to get back to this for the next 20 to 30 years. That's red right now. So I call it green space. So I buy just outside the green space, and then history usually tells me that the directional green circle's headed this way. It's headed clockwise. And it usually does go clockwise. It's human habit. So they'll usually project out this way, and then they'll come back around. And now we have DFW. So we got Dallas, Fort Worth, which is Frisco. We got all these other places. And now it's DFW, and it's a huge MSA.
Yeah, no, it's definitely, I think it's top, is it the top 3 or 4 MSA in the country?
Yeah. And now we have the Texas Triangle. So you've got Dallas, Austin, and Houston. So that's your Texas Triangle. So yeah, you might take a 30-year bet and go buy something in Arlington, Texas, which has been in the middle of the triangle for say, and it might take 30 years to appreciate that, but eventually it will look like DFW.
Yeah. So on these deals, I guess, are you typically doing like a syndication? Are you doing partnerships? What's the kind of structure on that?
So I'm a fund manager. I love funds. I don't know why anybody would do a syndication. I will tell you, I've done more syndications than I care to admit. Um, I'm a true believer in real estate funds. That's a different time, different place for a podcast. But we syndicate these deals. We, attract partners. It's a group of general partners. It's kind of like a SPV or not really SPV, but a SPE, a special purpose entity, to where it's a joint venture style structure when we have, a management agreement, op agreement, and we have partners in here that operate this deal. We do it all together. We are getting ready to launch a $50 million fund, and this fund is a hybrid, meaning it's a diversified fund. So it's not for the purpose of just buying and acquiring multifamily properties. We'll acquire RV parks, land, raw land for entitlement, and then for multifamily distressed and stabilized or value add product.
And in this fund, are they all located kind of in a certain region, or
North Carolina, South Carolina, Florida, Texas, and then all types of
all
cities
that?
and MSAs.
Okay, very cool. Wow, so that's crazy. So you've gone basically, you've gone from welding early days to master electrician to, really putting this roadmap together, manifesting, and now you're managing, raising money on a $50 million fund. So that's a really cool journey. And then are you, like AI is the new buzzword kind of out there. Are you seeing any new ways to leverage technology in your space? Are you coming across anything like that? One thing locally I do kind of as an example is, when I'm looking for contractors on my development deals, I'm able to go to the city's website and pull all the building, certificate of occupancies that, are out there. And then from there, I'm able to kind of back into the contractors that have done, four-story properties or duplexes or fourplexes. So I'm able to, use the city's platform and really kind of go backwards and find a lot of pretty good contractors that way. But are you able to, how are you leveraging technology in this space today?
We are definitely an innovative. All the companies I have that I choose to continue to grow, we are definitely implementing the most innovative tech that we can. Even our apartment buildings with leasing and stuff like that, we implement chatbots. We implement, calls to text. We implement AI-driven Salesforce to contact tenants that are prospects. Again, it comes down to you're trading yourself, your hours, for a physical outcome. So AI is a beautiful tool because it allows us to do physical tasks that came out of our calendar. I can have a prospect or calls that come to my property, and I can filter those down to only the 30 people that I really want to talk to. So I may have weeded through 800 appointments 2 years ago to get to 30 clients that I really wanted to talk to, and there's only 3 that I actually do business with. So from that, AI and all these other tools are amazing ways to implement for business that physically take operational drag from your company. I highly recommend implementing all types of technology.
Yeah, I mean, even the last 12 months, 24 months, it's just really come along. There's all kinds of resources. There's there's like AI, I'll probably mess this up, but I believe there are AI bots that'll go in and kind of scrape the MLS, and that'll scrape the listings, kind of sort that out on a nice Excel spreadsheet. And it gives you the ability to really sift through and hone into the detail that you're specifically looking for when at least when I'm hunting for deals. So yeah, there's some pretty good platforms out there, websites and chat box that
I mean, I
that
do
I've come
asset
across.
management, and
Yeah.
one of my friends called me up and said, "Hey, we're working on building an AI asset management tool." And they said, "Would you like to take it for a test drive or maybe give your insights?" So we dove in the tool, and it was so awesome because it pairs with everything to do with my properties. And then it's based off of certain data points that turn red or green. So if occupancy is at a certain place or money's at a certain place, it turns it red. What's the tool do? It sends me a text message. And it tells me in the text message exactly what line item is off pace. And when we looked at the capabilities, and then I was asked to run through it and make suggestions, and I'm like, hey, we should do this and this. And by the time we were done, it nearly replaced me, which doesn't scare me. I'm like, hooray, now I can work on something else and just manage that tool for an hour a day. I don't need to, go through every profit and loss. I don't need to make the phone calls and emails. It's right here.
Yeah. Oh, that's so cool. So cool. Okay. We're kind of coming towards the end here. But I've got a couple kind of closing questions. But yeah, for the listeners out there, I think I know what you'll say, but what's one thing that the listeners can do today and implement today, to get to where you're at?
Start right here.
Start with the legal pad. Yeah.
And grab a pen and start writing. And you know why there's so many sheets on a legal pad? You can tear a bunch of them off when they don't fit right. And you can just keep writing, and you can just keep improving. Don't go with the first thing you wrote down on page one, just like you never buy the first house you look at. Grab your legal pad and write out a few destinations. I want to tell you something else that AI is amazing for. If you go to ChatGPT, OpenAI, it's a conversation bot, and you can tell it your ideas, and it's like actively talking to someone. So, just like a company slogan, things like this, write it out and then put it in ChatGPT and say, what's the risk to going down this road, like becoming an engineer? And then it spit it out. I mean, it is truly amazing. But, just take out that legal pad and start writing. And then, hey, when you get down the end of it, you're like, you know what? This seems cool, but I think I can do better. Tear that one off, ball it up, throw it in the trash, write another one down. And if you go through 4 or 5 legal pads if you have to, but just keep writing. But the number one thing is start today. I'm telling you right now, tomorrow is not promised. So start right now. Just start.
No, that's excellent. Yeah. Start today, take action, and just do it. It's like the old Nike slogan, just do it. So,
right.
Okay. I think I'm gonna just wrap this up for everybody out there. But yeah, just Eddie, this has definitely been a pleasure. I love hearing your story. This is definitely an education and a pleasure. I love hearing your story. Coming in from a welder back in your high school days to the master electrician. And doing the reverse engineering that you did, I think is so instrumental for people to do, and just kind of reflect on themselves and, take that legal pad. And if it doesn't fit, tear it off, start over. You haven't lost anything, but you've only gained more clarity. So it's a win-win for everybody that's willing to take action and take that next step. So yeah, where can the listeners reach out to you and connect?
Absolutely. Before I'll say that, I want to encourage your entire audience. Dreams are free, and I encourage you to dream big. I mean, dream really big. The bigger the dream, the more people will actually bolt onto your dream to create that flywheel so you can actually truly go somewhere. The bigger the dream, the more partners you can have and the more you can afford. So just dream big. It's free. Just dream. The best way to find me, I found, is actually if you go to Google or any internet platform and you type in Eddie Austin BEX, so hashtag in the front, Eddie Austin BEX. That's the best way. So hashtag Eddie Austin BEX. And you should see quite a bit of stuff, my YouTube channel, my LinkedIn, Instagram. So my profile picture is exactly the same or should be across all my platforms. And then Eddie Austin BEX is tagged somewhere in there. So if you find Eddie Austin BEX, it's probably me.
Awesome. Well, thank you. Appreciate it, Eddie. And thank you, listeners, for tuning in to the Blueprints to Building Wealth podcast. We will talk next week.
Thank you.
Thanks for listening to the Blueprints to Building Wealth podcast. If you received value from this episode, please share with a friend. And if you thought this was really valuable, please share it on your social media platforms so we can help grow the community and give insight to more folks out there. Thanks for watching, and we'll see you next time.